Good morning. Welcome to today's session, the second UK GCC Quarterly Tax Dialogue for 2012, led by PricewaterhouseCoopers Ghana. So my name is Maimuna Haruna. I'm a senior manager with the tax line of service at PwC Ghana, and I will be the facilitator for today's session. Wherever you are, whether in Ghana or joining us from outside, whatever time it is, welcome to the session. So for today, our topic is withholding tax in Ghana, what businesses need to know. And as a tax professional, I can say this is something that I would consider to be quite topical, a perennial issue that comes up in a lot of tax audits with some of our clients. So I think this is a timely session, and also something good for us to discuss and come to an agreement with as a community. So following from that, really the aim of this session this morning is to provide businesses with some practical guidance on withholding tax compliance, the filing procedures, and then some strategies to reduce tax exposure. Now, again, as I said, this session has been organized by the UK GCC, that is the UK Ghana Chamber of Commerce, which has been established since 2016 to promote trade between the UK and Ghana. Now, joining me today, we have an illustrious panel. I think at the moment we may be missing Mr. Daniel Near, who may join us later. But for now, I will introduce Dr. Charles Echiahini, who is joining us. Yes, I can see the camera is on now.
Hi.
Yes, hello, doctor. Yes, welcome. And Dr. Charles Echiahini is joining us from Crocodile Machets. He is a seasoned professional, serving as the finance director, company secretary, and board member of the company. And he also holds several directorships with other companies and across other industries. So well-seasoned, well-experienced, able to give us the perspective of the taxpayer on the issue. So welcome, Doctor. Let us know if you have any opening remarks, yeah?
Right, okay. Mamuna, thank you very much for the opportunity. And also thank you, UK Ghana Chamber of Commerce, for the opportunity given to me to present to your audiences the withholding tax in Ghana, what business need to know. So yes, today we'll be going through the historical antecedent of withholding tax worldwide, come down to Ghana, and how withholding tax is performing in Ghana, various rates that are needed, and its penalties and risks involved. What are the strategies also involved to know about managing withholding tax? Yes, so as we said, I'm a finance director of Crocodile Market, and I'm still holding the position as a finance director. And I do other activities as far as tax, finance, and auditing and assurance are concerned. So I'm glad to join this wonderful team this morning. Thank you very much.
All right. Thank you, Dr. Echiahini. Okay, I can see we have Mr. Near as well. So I will also introduce Mr. Near. Mr. Daniel Near is with the Ministry of Finance. He is very much a seasoned tax administrator. He has over 37 years actually of experience in tax administration. And he's working, as we know, with the Ministry of Finance, which is the body that is going in to propose tax laws and bringing up our tax budgets every year. So it's actually good to have him on the call. His contribution will be quite invaluable. I don't know if Mr. Near, you'll be able to give us some comments as well.
I'm happy to be part of this panel today. Thank you.
Right, thank you. Thank you so much.
Yeah. And I will be in and out of the meeting, but when it comes to the main panel, around. Withholding tax is a very interesting topic, and I'm sure the presenter will very good justice so that we can have a very powerful discussion. Thank you.
All right. Thank you, Mr. Nia. Okay. And also, we have a third member of the panel. That's Mr. Lawrence Ochonyami, who is joining us from the Ghana Revenue Authority. Oh, I can see the camera is on. Yes. All right. He is currently an assistant commissioner, actually, with the GRA. And also, quite fortunately for us, he's heading the DTRT technical training unit within the Training and Development Department. So we're also in very good hands when it comes to someone to take us through the withholding tax regime and to give us the GRA's insight on the interpretation of the tax laws in regards to withholding tax. So, Mr. Ochonyami, I'm not sure, are you able to give us some quick comments before we move on?
So good morning, everybody. My name is Lawrence Ochonyami. You've rightly introduced me. I'm representing the Ghana Revenue Authority, and I'm speaking from the GRA's perspective on the application of the tax laws with regard to withholding taxes and what exactly businesses need to know. And then we'll be available to respond to questions and participate in the discussion. So by the time we are ending the section, we'll all be at the same level. Thank you very much.
Okay, thank you very much for that introduction. And yes, maybe to give some context to why we have two representatives from government, one from Ministry of Finance, one from the GRA. Like I said, the Ministry of Finance is really the body that's been proposing and pushing a lot of the legislation that relates to tax, whereas the GRA, as represented today by Mr. Ochonyami, is the body responsible for implementation of this legislation and also interpretation. So you'll note that a lot of the time the GRA comes in to do training for taxpayers and also to do other things such as issue practice notes and administrative guidelines, which give their position sometimes on some of these tax laws. So I think in that regard, we're very well represented. So thank you all for joining us. Okay, and it's just a reminder, I think it's also been mentioned, but audience, feel free to drop in any questions you have during the chat, in the chat. So what we will do is we will go through, do our opening comments. That is a little presentation on withholding tax to give a bit more information. And during that time, feel free to include your comments. We will, at the point when we're having the panel discussion, refer to those comments and then try to respond. Okay, all right. So as I mentioned earlier, again, our topic for discussion is on withholding tax in Ghana, what businesses need to know. And I guess maybe to give a quick overview of what actually withholding tax is, considering we have a diverse audience. And withholding tax is a key mechanism in Ghana's tax system, and it's used by the government to ensure upfront revenue collection and improve tax compliance. Now, I know Mr. Ochonyami will take us through the details of the withholding tax regime in Ghana, but I just wanted to give us a bit of a quick overview. So I think most of us will have some experience with withholding tax. I think most of us, at least to some extent, have been employees at one point in our lives, looking at our pay slips, seeing the income that's in our contract, and seeing the deductions coming out. So I think most of us are fully aware that some tax will be withheld by the employer before we actually get the amount that comes to hit us in the bank. So that is an example of withholding tax, but it also applies to other transactions such as interest, dividends, and payments for goods and services. So again, the primary purpose of this is to ensure that there's a timely and efficient collection of taxes and improve government cash flow. Because if we don't use withholding tax, for example, what does end up happening is that it's up to the taxpayer then to account for tax, and these have fixed deadlines. So when it comes to withholding tax, the rates will apply differently depending on the type of transaction and the nature of the payment. In Ghana, our withholding tax rates can be as low as 3% or even as high as 25%. So that's something to consider. And again, also, considering this is also a UK GCC forum, we know that Ghana does not operate in isolation. It's part of a global community. And so we do also have tax treaties with other countries, which can sometimes impact on the application of withholding tax. It may come in to reduce the rate or even to eliminate it entirely, depending on the type of cross-border payment. So essentially, this is just a small introduction to withholding tax. And again, the purpose of this session is to offer some insight and also to kind of educate our audience. And this is coming in because withholding tax can be a very, it's a perennial issue. Like I said, it comes up a lot in my experience in tax audits. It's one of the trouble areas, just due to a lot of the different nuances that come into play. So I think on that note, Mr. Ochonyame, if you're ready for us, you can take us through your presentation.
All right. How many minutes do I have for my presentation?
I think we can give you up to 30 minutes.
Up to 30 minutes, okay.
So
then permit me to share my slides. Okay.
okay.
Can you see my slides?
Yes.
All right, so 30 minutes, let me quickly walk us through an overview of withholding taxes in Ghana. This is the outline of my presentation. What is withholding tax? Is it a separate tax type? What are the legal framework? Parties to withholding tax transactions, types of withholding taxes, applicable rates, exemptions from withholding taxes on overtime payment, withholding taxes on bonus payment, final and non-final withholding taxes, and then we take some Q&A. We all know that GRA is an autonomous state institution that is mandated for the administration of all tax types in Ghana. And we started this whole thing in 2009 when the GRA Act was passed, Act 791, to be the sole institution responsible for the administration of what? All taxes in Ghana. And like you rightly mentioned in your introductory remark, we are responsible for the implementation of the tax laws. And the Commissioner General is given power under Section 100 of the Revenue Administration Act to interpret the tax law by issuing out practice notes and administrative guidelines. And I'm sure that Commissioner General has issued some practice notes specifically with respect to withholding taxes that will guide our cherished taxpayers. You can access that withholding tax practice note on our website, and it will be a very useful guide as to the interpretation that the Commissioner General has placed on various aspects of the law. So what is a withholding tax? Basically, it's a tax that is deducted at source by an authorized agent, and then that tax is later accounted for to the Commissioner General of the Ghana Revenue Authority. So they are taxes that are deducted at source when making payment to third parties. And then the authorized agent that we refer to as the withholding agents make a deduction when making the payment and then pay those taxes to the Commissioner General. The question is whether it is a separate tax type. Is a withholding tax a separate tax type? The answer is no. It is an income tax. It is an income tax. And it is a tax paid in advance in respect of what? A person's personal income tax or corporate income tax. So it's just a deduction, an advance payment for a personal income tax or corporate income tax. So it's not a separate tax type. It's just an income tax, but it is paid in advance in respect of the PIT of that individual or person or the corporate income tax of that company or entity. It is a tax deducted at source from a person's employment income, business income, or investment income. So upfront deduction. We'll deduct it as source, and then you later on make your full disclosure of income, and then which the taxes that were paid or deducted as source will be credited to you. Now, the period of payments, we have two main types of categories of payments, payment mode. For income tax purposes, we have individuals or persons that pay taxes on quarterly installments. Ordinarily, taxes, income taxes, or that's corporate income tax or personal income tax are supposed to be paid on quarterly installments. However, withholding taxes are not paid on quarterly installments. The withholding agent is to pay the tax to the Commissioner General within 15 days after the end of the month in which the tax was withheld. 15 days. And then the returns that must accompany the payment must also be submitted. So, for example, any transaction in the month of June would have to be paid on or before 15th of July. Or any transaction in the month of May would have to be paid on or before 15th of June. So that is the timelines for payment of withholding taxes. So generally, withholding taxes are not quarterly installments. They are not paid on quarterly installment basis, but they are paid within 15 days after the end of the month in which the tax was withheld. And what happens to the withholding agent who fails to withhold? If you are a withholding agent and you fail to withhold tax, you become liable. The Commissioner General would surcharge the withholding agent who fails to withhold the tax, and the withholding agent will pay the money, the tax in the form and the manner that should have been paid if it was withheld from the withholdee. Now, the question is, who is a withholding agent? Any person that is authorized by law to withhold. Any person that is authorized by law to withhold is a withholding agent. So, for example, in Ghana, all persons are withholding agents. Companies, partnership, charitable organizations, entities, NGOs, churches, religious institutions, all persons are withholding agents by law. In cases where the law decides to exclude somebody from being a withholding agent, the law will be very specific. So the withholding agent is anybody authorized by the Income Tax Act to withhold. Like I mentioned, all persons are withholding agents. All persons, entities, companies, trusts, partnership, and all of them are withholding agents, including charitable organizations like NGOs, churches, free zone companies. All of them are withholding agents. When you do transaction with third parties, and you are making payments to the third parties, the law imposes an obligation on all withholding agents to withhold the taxes and pay to the Commissioner General within 15 days. Now, the withholdee means the person receiving or entitled to receive the payment from which the tax is required to be withheld. So the withholdee is the one that suffers the liability. So the withholding agent is only acting as an agent between the withholdee and the Commissioner General. So the withholding agent would, when making payment to the withholdee, deduct the money that is prescribed by law, the amount that is prescribed by law, and pay to the Commissioner General. So the one that actually pays the tax or suffers the liability is the withholdee. Now, there are the types of withholding. Basically, there are 3 types of withholding under the income tax law. Before I come to the types of withholding, the legal framework for withholding taxes is the Income Tax Act 2015 at 896. The Income Tax Act 2015 at 896 and Section 114 from Section 113 to Section 121. All those sections apply to withholding taxes. Section 113, 114, 115, right down to Section 121 applies to withholding taxes. Now, when it comes to the types of withholding taxes, we have 3 types. Withholding by the employer, that relates to employment income, withholding from investment returns, and withholding from supply of goods, service fees, works, and contract payments. And their sections are just attached to the slides. When it comes to withholding by the employer, all employers are withholding agents. Every employer is a withholding agent. So in the case of employee, the withholding agent is the employer. So all employers are withholding agents, and they are under obligation to deduct the taxes from any amount paid to the employees. So any payment that is made to the employees, the withholding agent is under obligation to withhold the taxes and pay to the Commissioner General. So generally, all employment-related payments are subject to withholding. Salaries, allowances, wages, gratuities, bonus payments, overtime, temporal employments, all of them, payments relating to the employment are subject to withholding under Section 114. And the employer is required by law to submit to the Commissioner General an employer's annual tax deduction schedule for every employee no later than 4 months after the end of each year of assessments. And the returns submitted must include the amounts of the assessable income received by the employee, the amount of tax withheld from the amount taken into account, all the necessary deduction, and then a copy of the schedule or a copy of the return, the annual tax return schedule is given to every employee by law. Now, withholding from investment returns, it says that any person, resident person that pays dividend, lottery winning, until recently, lottery winning was one of the elements of it's subject to withholding taxes, but quite recently there was an amendment that repeals lottery winning from being subject to withholding. So dividend, interest, natural resource payment, rent, royalties to another person. So when a resident person pays dividend, or a resident person pays interest, or natural resource payment, or rent, or royalties to another person, and the payment has a source in the country, the resident person making the payment is required by law to withhold. So dividend is subject to withholding. Interest payments to third parties is subject to withholding. Natural resource payments to third parties is subject to withholding. Rent payment to third parties, royalties payment to third parties are all subject to withholding, to the extent that the payment has a source in the country. Now, under investment returns, there are 4 exclusions. Any payment that is already subject to tax under Section 114, or payment relating to employment, or any payment that is made by an individual unless the payment is made in conducting business, interest paid to resident financial institutions, and any payment that is exempt amount. So, for example, any exempt income or exempt amount is not subject to withholding. Any interest that is paid to resident financial institution is also not subject to withholding. And then any payment that is made by an individual is not subject to withholding unless that payment is made in conducting business under Section 115 of the Income Tax Act. Now, these are some of the examples of withholding taxes from investment returns and their rates. So rent tax, 8% for residential, 15% for commercial. So that is the withholding, and rent suffers a final withholding tax. Interest payment is subject to a withholding tax of 8%. So the only interest that is exempt is interest that is paid to resident individuals by resident financial institutions. But interest paid to persons other than individuals is subject to withholding at the rate of 8%. Taxes on dividend payments, so it's subject to tax at the final tax of 8%. Royalty payments to third parties is subject to withholding tax of 15%. Natural resource payment is subject to a withholding tax of 15%. And then consideration received from realization of assets. Consideration received from realization of assets. And it depends on who is disposing of the asset. If the person disposing of the asset is a non-resident person, then the withholding rate is 10% final. But if the person disposing of the asset is a resident person, then the withholding tax is 3% on the gross amount or the consideration. So now the law, the income tax has been amended to introduce a withholding tax on realization of assets. Realization of assets. And like I said, it depends on who is disposing of the asset or who is selling the asset. If the asset is being sold by a resident person, then the rate is 3% on the consideration and it's 3% on account. But if the person disposing of the asset is a non-resident person and is disposing of an asset in Ghana, then the rate is 10% final. Section 116 relates to withholding from supply of goods, service fees, works, and contract payment. And it requires resident persons to withhold tax for supply of goods, service fees, works, and contract payment, which has a source in this country. So source in Ghana. And when you come to section 1161A, it links service fees with a source in the country that is paid to resident individuals. And it includes fees and allowances to a resident director, manager, trustees, a member of a board of a company or a trust. They are subject to withholding 20% on accounts, payment to part-time teaching lecturers, examination, invigilation, and supervisors. The withholding tax there is 10% final. Endorsement fee. Any person that endorses a service or a product that is receiving payment, the person making payment is required by law to withhold 10% on endorsement, any payment in respect of endorsement fee, commission to lotto receivers and lotto agents, 10%, commission to sales and canvassing agents, 10% on accounts, commission to insurance, sales and canvassing agents, also 10%, and any other supply of service to a resident by a resident individual is 7.5% on account. And then when that person also pays service fees or insurance premium to a non-resident person, that is also subject to withholding under section 1161B. The service fees is 20% final and the insurance premium is 5% final. So these are payments to resident services provided by resident individuals, and the law specifically provide a list of those services that should be subject to withholding under section 1161A. Under section 1162, the law says that a resident person other than an individual must withhold tax on the gross amount. Here we are looking at the gross amount, the turnover or the gross consideration of payments at the rate provided for with respect to the supply or use of goods is 3%, provision of any works 5%, and supply of service 7.5%. And the law provides for a threshold that's for the withholding agent to trigger the withholding provision. The amount, the gross amount that should be subject to withholding must exceed a 2,000 currency units or 2,000 Ghana cedis. So once the transaction value exceeds 2,000 cedis in respect of supply of goods, supply of works, or supply of service, the threshold amount requires that any payment in excess of 2,000 should be subject to what? Withholding. And like I indicate, supply of goods is 3%, works is 5%, and service is 7.5%. And under section 1162, the law is very clear that it is persons other than individuals who must be withholding agents. It's a resident person other than individuals who must be withholding agents. So the law is clear there. Then it continues to say that for purposes of determining the contract, for purposes of determining the threshold, the 2,000 threshold. They say 2 or more contracts in respect of the same goods, works, or services shall be treated as a single contract. So, for example, if you are calculating the threshold of 2,000, if the first transaction is, let's say, 1,000, you cannot withhold because it's less than the threshold. If the second transaction is, let's say, 800, you can still not withhold. But once the transaction exceeds 2,000, you aggregate all the transactions, and then the withholding will be applied on the gross amount. The withholding will be applied on the gross amounts. Then under section 1162, the following are exempt from withholding. So any premium paid to registered insurance company under an resident insurance company under an insurance contract in Ghana is exempt from withholding under section 1162. Then contract for sale of goods, which constitute a trading stock for both the vendor and the purchaser. So if it has to do with the supply of goods, and the goods in question constitute a trading stock for both the vendor and the purchaser, the law says that there should not be withholding between the two of them. For example, if it has to do with supply of goods, and then there's a wholesaler and then a distributor, and the goods in question constitute a trading stock for both the wholesaler and also constitute a trading stock for the distributor, then the law says that there should not be withholding between the wholesaler and the distributor. Similarly, between the wholesaler and the retailer, if the goods in question constitute a trading stock for the wholesaler and also constitute a trading stock for the retailer, then between the two of them, there should not be withholding. But it should constitute a trading stock for both at the same time, but both the vendor and the purchaser. Then the Commissioner General can also grant withholding tax exemptions under section 1165 for a good cause shown, or if the taxpayer has demonstrated that he is compliant with the tax law, the taxpayer has a satisfactory tax records, he could apply for an exemption. This application can only be granted to the withholdee and not the withholding agent. The withholding agent cannot apply for an exemption under section 1165. So withholdees that have demonstrated a good cause or have proven satisfactory tax record can apply to the Commissioner General to be granted an exemption from withholding under section 1162. Now, these are a summary of the rates I've already mentioned. Fees and allowances paid to resident directors, 20% on accounts, part-time lecturers and examiners, 10%, final endorsement fees, 10%, commission to lotto receivers and lotto agents, 10%, commission to sales agents, 10%, resident insurance and canvassing agent, 10%, supply of goods, 3%, supply of services, 7.5%, supply of works, 5%. For non-supply that is made to non-resident person, it's the same with respect to supply of goods, works, and services. The law provides that it should be subject to withholding, but for when you are doing a supply to a non-resident person and the contract that gave rise to the supply crystallized in the country, and the payment is made under a contract with a non-resident person, the law requires that the transaction should be subject to withholding at the rate of 20% for supply of goods, 20% for supply of works, and 20% for supply of service. So when you are dealing with non-resident, it's 20% final across board. But when you are dealing with resident persons, the supply of goods is 3%, works is 5%, and service is 7.5%. But when you are supplying and transacting with non-resident person, then the rate is 20% across board for supply of goods, works, and service. And the law requires that the withholding agents must submit the contract that gave rise to the transaction, indicating the nature of the contract, the likely duration of the contract, the nature, the name, and the postal address of the non-resident person to whom payment under the contract is made, and then the total estimated amount payable under the contract, and it has to be done within 30 days to the Commissioner General. Now, Section 1169 also requires that any resident payments that makes payment to a non-resident person for rendering management and technical services fees should be subject to withholding tax at the rate of 20% final. So management and technical services fee, 20% final under section 1169. Then withholding taxes for relevant transport business and telecommunication under section 105G and 105H of the Income Tax Act is also subject to withholding tax of 15% final. So under section 105G and 105H, any entity that provides telecommunication services or any entity that provides relevant transport business is subject to withholding at the rate of 15% final tax. So this is a summary of taxes on payments to non-resident person, supply of goods 20% final, supply of service 20% final, supply of works 20% final, management and technical services fees 20% final, insurance premium 5%, telecommunication services 15%, relevant transport business 15%, repatriated branch profit 8% final. So these are some of the examples. In the course of my presentation, I indicated withholding tax final, final withholding, and non-final withholding. So section 119 of the Income Tax Act provide a list of withholding taxes that are supposed to be final. And the tax withheld satisfies the tax obligation of the taxpayer. In other words, the taxpayer, the income which suffered the withholding shall not be included in ascertaining the assessable income of that person any longer. And when you go to section 119, it provides a list of payments that should be subject to final withholding tax. Dividend is one of them, endorsement fee is one of them, rent is one of them, part-time teaching and examination invigilators, payment to part-time teachers or lecturers is also part of those. So when you want the full list, you go to section 119 of the Income Tax Act. It gives us the list of withholding taxes that are final. All other withholdings not listed in section 119 are withholding tax on account, which means that even if the income is subject to withholding, the withholdee will still have to disclose that income for tax purposes. So the withholdee is required to include the income in calculating his or her assessable income. So all other income not specifically mentioned in section 119 suffers withholding tax on account. Interest, royalties, natural resource payment, supply of goods, work, services, and all others falls under non-final withholding tax. Now, when it comes to PAYE, these are the current rates that we use in calculating the withholding from PAYE. So I'll share the slides, and so you can have access to the current rates. Now, persons that must withhold. Non-resident persons are not required to withhold taxes. The law is clear that non-resident persons cannot withhold taxes. So if you're a non-resident person and the term resident or non-resident is a term of act, section 101 of the Income Tax defines residency or non-residency of an entity or a person. But the position of the law is that non-resident persons are not required to withhold taxes. Then the question then is, who must withhold? One, resident persons must withhold taxes, and any Ghanaian permanent establishment must also withhold taxes. So these are persons that must withhold taxes. And like I indicated in my introductory remarks, companies, partnership, all entities, charitable organization, religious organization to withhold taxes, except as otherwise specifically mentioned by law. And then non-resident persons that have established permanent establishment are also withholding agents. The law says that we should treat them the same way and the same manner as resident persons. So permanent establishment are also what? Withholding agents. So they must also withhold. Withholding under double taxation agreements. Yeah. So when you take our DTAs, currently we have about 14 DTAs, double taxation agreements. When you look at the passive incomes under our DTA are interest, dividends, royalties, and fees for technical services. All of them, there are withholding rates in there. So in the course of treaty negotiations, we negotiate rates for the DTAs. Now, the position is that where the withholding tax rate under the domestic law is different from the tax rates under the DTA, then the DTA rate must prevail. So anytime you are dealing with an entity that is one of the the entity is from one of the member countries that we have signed DTAs with, the DTA's rates must prevail. So, for example, if the management and technical service fees under the domestic law is 20%, and the DTA rate provides that it should be 12%, the DTA rates must prevail. So, in all countries that we have DTA with, the DTA rates would apply. It is only in cases where maybe the DTA rate is higher than the domestic rate. If the DTA rate is higher than the domestic rate, then we fall on the domestic rate on the basis of the article on non-discrimination. We have an article in our DTAs which is a non-discrimination article. And that one, you cannot treat your residents more favorably than you treat any other treaty partner. So if the rate in the DTA is higher than the rate in the domestic law, then the domestic law rate will apply. But if it's vice versa, in other words, the rate in the DTA, the domestic law is higher than the DTA, then the DTA rate will apply. So in all cases, we should be mindful of countries that we have DTA with and the application of the rates that are applied. But for you to enjoy the rates under the DTAs, you must satisfy the conditions that are necessary for you to enjoy the treaty benefit. It's not everybody that can benefit from a treaty. There are requirements that must be satisfied. There are residency rules that must be satisfied. Persons that want to enjoy benefits must submit their tax residence certificate to the Commissioner General. We need to establish the beneficial ownership of the person who is enjoying the treaty benefit. All those things have to be satisfied before you take advantage of a DTA rate. Until then, if you do not have a DTA with Ghana, then the domestic rates will apply. Withholding on overtime payment is simple. Overtime payment is subject to a final withholding, and the LI Regulation 5 of LI 2244 says that if you make an overtime payment and overtime payment is up to the overtime payment is up to 50% of the employee monthly basic salary, then the overtime payment should be taxed at the final withholding rate of 5%. But if the overtime payment is more than 50% of the employee's monthly basic salary, then up to 50% of the employee's monthly basic salary is taxed at 5%, and the excess overtime is subject to withholding at the rate of 10%. So that is the withholding rate for overtime. So when you are making overtime payment to qualifying junior employees, then that overtime is subject to a withholding rate at the concessionary rate of either 5% or 10%, or you use aspect of it to be subject to a rate at 5%, the excess will be subject to 10%. Bonus payment up to 15% of the employee's annual basic salary is subject to a final withholding rate of 5%. So bonus payments up to 15% of the employee's annual basic salary is subject to a final withholding rate of 5%. Any bonus payment in excess of 15% of the employee's annual basic salary is added to the employee's income and taxed within the graduated rate. Other types of withholding include payment made to casual laborers is subject to 5% final. Payment part-time employment. Part-time employment is subject to 10% on account. I think that I've gone through the provisions under the Income Tax Act. I'll rest my case here, and then I'll open up for questions. Thank you very much.
Okay, thank you so much, Mr. Ochonyame. So I think you're right on the dots. We've done 30 minutes of presentation. I can see there are a couple of questions. Maybe since we've opened the floor, we will take those questions. So let me go through. Okay, so I think the first question I'm seeing here is it's a bit more on withholding VAT. This might be a bit out of scope, but Mr. Hochonyame, I'll throw this one to you. How can company A, which is not a withholding VAT agent, benefit from withholding VAT when it is applied by one of its customers, company B, which is the withholding VAT agent?
Hello, shall I respond?
Yes, please.
All right. The presentation I've just made specifically relates to withholding under the Income Tax Act. So the presentation we have made has not been extended to cover withholding under the VAT. Right. However, the VAT law authorized the Commissioner General to grant authorization to some selected agencies to withhold taxes when making payment in respect of VAT. And so those selected institutions, most of them are ministries, departments, and agencies. When they're making payment in respect of VAT, they're supposed to make an upfront withholding of 7% and pay to the Commissioner General of Ghana Revenue Authority. And then eventually, those payments that were made upfront, the other party will claim it as an input VAT when calculating their standard withholdings. So for now, that is what I can say in respect of that question. The very, very question that relates to VAT would have to look at it within context. It's a very whole presentation that would have to do in respect of withholding on VAT.
Yeah.
Unfortunately, the scope of this discussion is limited to withholding taxes under the Income Tax Act. But yes, institutions that are authorized to withhold under the VAT, which mainly include the ministries, departments, agencies, and authorized agencies by the Commissioner General, are required to withhold upfronts, 7% when making transactions in respect of VAT, transactions that are subject to VAT. And in doing so, they'll make the upfront deductions and pay on behalf of the clients. And then the clients will now claim those payments as input VAT when calculating their mechanics, when doing their input-output computations. So that is the response I can give for now.
Okay, thank you. And I think maybe to add to what you've said, like you said, withholding VAT, I think it's coming under a different law from what we've even been discussing this morning, which is the Income Tax Act. Withholding VAT is more related with VAT, which is under the VAT Act. However, like you've mentioned, there is withholding VAT operates in a similar principle where a portion of the VAT is being withheld, obviously by the customer when they're paying the supplier, and then it's remitted directly to the GRA. And I think you've also mentioned, of course, that what the supplier has as a recourse is that they're able to claim the input VAT that has been on the VAT that has been deducted at source by the customer. So I think that is well established. So thank you for that response. I'll move on to the next question from Hilde, which is, there is a DTA between Ghana and the Netherlands. Under this regime, withholding tax on services is 8% instead of 20%. Do we need additional pre-approval from the GRA to apply this, or can we go ahead and withhold 8% on services from Dutch service suppliers and consultants? And I think this question came in before your presentation, so it may have already been answered, but if you could reiterate your answer for clarity.
Yeah, all right, thank you very much. Like I indicated in my presentation, when it comes to the application of DTAs, there are certain conditions that must be satisfied before a person can benefit from a treaty. So you do not, until the Commissioner General is satisfied that all those conditions are satisfied, the taxpayer or the agent could not just proceed to apply the rates that are found in the DTAs. Now, when you look at the articles on passive income, the articles on interest, article on dividends, article on royalties, and the article on natural resource management and technical service fees, if you look at those articles, you realize that there are two main conditions that are specified in those articles. The first one is your residency requirement or the residency status, whether the person is tax resident in the resident state. Is he tax resident in that other resident state? That is one. You have to prove to the Commissioner General that yes, you are a tax resident in the other state, in Netherlands. Then the second condition is whether the beneficial owner or the person that is receiving the payment is also resident in Netherlands. You know, you can be tax resident in Netherlands, but the beneficial owner may not be resident in Netherlands. So both conditions has to be satisfied. Your residency requirement will have to be satisfied. The beneficial ownership requirement will have to be satisfied. And all other benefits, all other conditions that needed to be satisfied before one can enjoy a treaty benefit, the Commissioner General will take them into consideration before granting an approval. And until that approval is given, you cannot just proceed to grant yourself a treaty benefit if the Commissioner General has not granted you an approval. Now, when the Commissioner General grants you an approval in respect of a particular transaction or a transaction that relates to a particular person, the Commissioner General is satisfied. So subsequent transaction with that person or that entity will not require any further approval from the Commissioner General unless you are dealing with another person or the transaction with another person that the Commissioner General will have to require to satisfy himself with other requirements that is needed. So, like I said, you do not automatically benefit from treaty benefits. Treaty benefits are subject to conditions that has to be approved by the Commissioner General. And until those conditions are satisfied, you cannot do or continue to grant yourself treaty benefits. We look at a lot of factors, whether the person is doing treaty shopping. We look at the principal purpose test. We look at so many other requirements or conditions. We look at beneficial ownership test. We look at your residency status and so on and so forth to determine whether or not you must get the benefit. So that is what it is with treaties. And like I said, anytime the conditions are satisfied, the treaty rates will prevail over the domestic rates. Thank you.
Okay, so maybe following up from that, and I think Hilde also came back. How does that work in practice? So from the way you've worded it, are we expected, for example, for every transaction with non-resident, where we want to apply the treaty benefits, are we saying that taxpayers need to, for every time there's a transaction, say, for example, this is a recurring, a contract with recurring transactions month on month, are they supposed to, for each transaction, get pre-approval? Do they have to wait for this pre-approval before they apply the rates? How long is it taking for the GRA to approve, considering, they have to pay these people in the interim, etc.? How does it work in practice?
All right. So to respond to that question, there are guidelines. We have developed some practice notes and some documentation on what you needed to do as an entity to benefit from to benefit from a treaty with Ghana. So that information is on our website. When you go to our website, the conditions, the procedure, and all that you needed to do is on our website. But to respond to your question, like I indicated earlier, if for, let's say, 2025 or 2024 or 5 year of assessment, the Commissioner General has been able to verify the residency status of the non-resident person, the beneficial ownership of the non-resident person, and all other requirements. He's been able to establish it. For that year, subsequent transactions with respect to the same non-resident person will not require to be submitted for approval for that year. But when you are dealing with another resident person, and that non-resident person is not known by the Commissioner General, then we'd have to go through the process of making sure that we satisfy the requirement whether that transaction qualifies under the treaty. But if it relates to a particular transaction, the status of the non-resident person has already been confirmed by the Commissioner General, approval is given, we know the non-resident person, then I don't need that it has to be recurrent. I don't think that it has to be recurrent. However, if you are dealing with an entirely new party, you are entering into a new contract with a new party that is not known by the Commissioner General, then the Commissioner General will have to grant approval. Thank you.
Okay, thank you. So what I understand from that is it's your view that we wouldn't need to, for recurring transactions, have to continuously get approval. If you do it the one time on maybe the specific contract and it's the same vendor, then that should be enough. Okay.
Exactly so.
All right, very well, thank you. Okay, I think the next question we have, it's a bit more on the portal. This is from Rebecca. She's saying, it seems no provision has been made for withholding tax filing for DTA transactions on the tax portal. So how do we file such withholding transactions correctly?
So I needed to verify on GateMaze whether or taxpayers portal whether those things have not been uploaded, and we'll quickly work on it. If it is not there, then we would have to, because there are a large number of taxpayers that would want to take advantage of the treaty. So I would quickly note it and escalate it to Commissioner DTRD, and then we'll get it fixed as quickly as possible. Thank you.
Okay, all right. Thank you. Dr. Tiaheni, I don't know if you have any comments on the presentation we had before now, or any questions.
All right. Thank you very much, well done, colleague, for your wonderful presentation. I will touch on the filing of the double tax treaty. Withholding tax is usually the normal way of filing your, monthly, withholding tax. You have to identify whether the person is resident or non-resident. So when you go to GRA website, is there the way you file your monthly withholding tax, the same way you file the DTT. Only that I have to indicate is the person resident or non-resident. And then you apply the appropriate rates as the senior man has mentioned. So basically that's it.
Oh, okay, Dr. So that's in response to the question on the portal.
Yep.
Okay. All right.
Thank you, Doc. Thank you.
Thank you. Okay. All right. I can see there are quite a couple of questions, so I think maybe we'll transition to the panel discussion and just have take more of these. I can see Ms. Anua has joined us, so I think we have the full panel now.
Yeah, I'm here.
Okay, excellent. All right, so thank you. All right, so I think I can see a couple more questions. Let me see. I think if looking at them, quite a couple of them may come to Mr. Hochonyami. So I think this one is, does one need to pay when applying for the withholding tax exemption? If no, when an officer of the GRA requests for money before taking up your withholding tax exemption, what do you do?
Shall I respond?
Please, yes.
Yeah, so the approval for a withholding tax exemption is one of the exclusive powers of the Commissioner General. It's one of the exclusive powers of the Commissioner General that can only be delegated to the commissioners. So no officer in GRA has the power to grant a withholding tax exemption. And secondly, the law does not require any person to make payments for that approval. There are conditions that has to be satisfied. Once you have satisfied that condition, the Commissioner General will take that decision. So it is not within the power of any officer in GRA to create an impression that they are in a position to grant a withholding tax exemption. Like I indicated, it's an exclusive power of the Commissioner General that can only be delegated to the commissioners. So if any officer requests any payments of that nature, please quickly escalate it to the Commissioner DTRD. Don't delay in informing the Commissioner DTRD or the office manager or our complaint center. Thank you very much.
Okay. All right, thank you. Thank you for that answer. So I think that addresses that question quite thoroughly. Yes, Mr. New.
If, as you said, you can use the complaint system like that. You can also inform the Ministry of Finance if you are not getting the news. I mean, the first route is to complain to the GRA through the right channel. If you feel the still an issue, you can complain to the Ministry of Finance. They will be policy.
Okay, all right. I think for me, maybe
you can also pick up the issue.
Okay, I think the audio is a bit, I don't know if it's just me, but the audio sounded a bit muffled. But I think what I got was that
Okay, can you hear me a bit better now?
Okay, sorry, I think I may have lost you there. But I think, I don't know if Mr. Neer is still on. Yes, I can see yes now. I think what I was able to hear before I briefly went off is you were saying that we can also refer to the Ministry of Finance if we need to whistleblow. Yeah, all right. So that's, thank you. Thank you for that. Okay, all right. So I think, Mr. Neer, maybe my question was going to come to you before we go back to the chat. There was, I think, one that came up. I think there was Mr. Hochonyame in his submission made the point that we have the threshold that is applying on withholding tax on, local goods, works, and services, and this is 2,000 cedis. And I think it's been 2,000 cedis since the Income Tax Act came into effect, 2016. So we're running on almost 10 years. So is this something maybe the Ministry of Finance is looking at that we may need to update in the near future?
Yes, we actually from other figures, the Income Tax Act, that we are looking at increasing the threshold. So we are currently working on the tax laws, and we expect that as part of that, we need to look at the threshold. We did it for the release a while back, and we're planning to do the release again, and then all the other figures. The threshold for depreciation of vehicles is an example. So there are quite a number of figures that will be reviewed.
Okay. Okay, all right. So I think that's good news for most taxpayers. I think I can say from experience, I've had a couple of should I say clients come in to say that they feel that the threshold is too small, especially considering it's an annual threshold that's been applied to several contracts as we've just been told over the presentation. So this is good news. Thank you, Mr. Nyo. Okay. So let me head back to the chat. I think I've skipped a couple of questions. Okay, I think maybe this may come back to what was said during the presentation, Mr. Hotronyame, and that is, can a resident company withhold from payment to an American company which has no PE in Ghana?
Repeat the question again, and let me hear.
Can a resident company withhold from payment to an American company that has no PE in Ghana?
Yes. When a resident company enters into a contract with a non-resident company under Section 11610 of the Income Tax Act, the resident person is required to withhold taxes with respect of supply of goods, works, and services. Yes. So the answer is yes. You do not necessarily need to establish a permanent establishment in Ghana before the withholding can trigger. So under Section 11610, once a resident person enters into a contract with a non-resident person and is making into payment, that payment as a source from Ghana and all that, we look at the source rules, then we can subject that transaction to withholding. So the answer is yes.
Can I add something here?
Yes, Ms. Enya.
Okay. I think the person was getting it. What can't happen is that a non-resident person cannot withhold tax. I think that's where the person. A non-resident person cannot withhold tax.
Mm-hmm.
A resident person or a person, a non-resident person with a PE, a permanent establishment in Ghana, can withhold tax. So that's it. So the PE refers to the permanent establishment being in Ghana. Then once the permanent person is. The other thing I think we need to make sure, the law also says that when we enter into such contracts for the supply of goods and services, we should inform the Commissioner General. Mr. Osunyame talked about the source fee. When you inform the Commissioner General, then the Commissioner General can then make a ruling as to whether withholding tax is due or not. So that you don't get into the situation where you decide that, oh, according to what I think I understand the source, it means that I shouldn't withhold from this person when you should withhold. So the advice I'll give you is that anytime you enter such contract, the law requires that you inform the Commissioner General. Inform the Commissioner General so that he gives you direction as to whether you withhold or you don't need to withhold. And even the rates you will have to withhold, especially when they are DPs, they will give you that advice. So, that's some advice I give to the person who are listening to us.
Okay. All right. So maybe to recap, if my understanding is clear. So you are suggesting that one alternative open to taxpayers is, of course, like we've already been told through the presentation, is that we are required to inform, the Commissioner General whenever we have transactions with non-resident parties. And I think the timeline given was 30 days even. And I think the whole point you're saying is for the tax treatment to be advised. I think we may come back to questions of practicality on that. How often are we having to do that, and how quickly will we get a response if we do that? But I think that the point is well made. I can see some hands came up. I don't know if they're still up. Wow. Okay, I see three hands up. Two hands up. Do I have this correctly? Siord.
All right. Thank you very much for the wonderful presentations. My name is Benjamin Kwenu. My question has to do with withholding tax for allowances paid to officers who are not directors or who are not part of management. If I correctly got it from the presentation, the rate for management or directors, that is allowances paid to management or directors, has a withholding tax rate of 20%. But in an event where the person is not a manager or the person is not part of management or is not a director, but any other person, be it out of station allowance, sitting allowance, or any other allowance, in an event, especially at the public sector, where it is impracticable to add the person's allowance to the employment income to be assessed through the graduated rate. So such a person, what is the rate, withholding tax rate that will apply? Thank you very much.
Okay. Mr. Hocho Nyame, do you want to take that one? I think that one is on how we apply the yeah.
Yeah.
Okay. Mhm.
So thank you very much, Emmanuel. The law makes provision for rates, specific rates that should be applied with respect to specific income. So all other payments that are not specifically provided for, or the rates are not specifically provided for, when you go to our LI, we have the income tax regulation LI 2244. I think regulation 4 of the LI 2244, it provides for a formula. It provides for a formula for withholding relating to withholding that relates to employment. So for all other transactions that rates have not been provided for, you go to the LI 2244. Regulation 4 provides a formula. And when you follow through that formula, it would help you in actual fact, the heading for that formula is with it's withholding from employment generally. Generally, it's a formula for withholding. So the law has specified that formula that you can use to calculate the rate of withholding if the rate is not specifically provided related to a particular income. Relating to a particular income. So for example, if somebody receives end of service benefit, ESB, or somebody receives an ex gratia, or something, those ones, the rates have not been specifically provided for in the law. That ex gratia treated this way, end of service benefit. So you take advantage of the formula, A times B over C, and the law provides for how to apply that formula. So I'll direct Mr. Emmanuel to visit the LI 2244 and try to see if he can make meaning out of it. And if he has any difficulty, we'll come in and provide clarity.
All right. Thank you for that. I can see another hand up. This is Umar. I think Umar, we got a comment from you earlier. Let me see if you have something else to add. You can please speak.
Okay, please. My question is the way the bonus is structured in the regulations that
is your question related to what you put in the chat on the monthly bonus payments? It says monthly bonus payments allowed by companies since the law says annual basic salary. I'm assuming he's asking whether we're allowed to pay bonuses monthly, considering the reference of the law is with annual amounts. So I don't know if, sorry, Dr. Charles, did you want to respond to that? I think I saw you respond. Yeah.
Yes. One regulator said that annual bonus, all taxes are to be more or less can be paid on daily basis, monthly basis, anytime intervals. However, at the end of the year, you need to file your returns. You may get tax surpluses or deficit. That's you may get tax refund from GRA, or you may end up topping up to GRA when you file your tax return. So yes, company can pay bonuses on monthly basis. You can pay bonuses on daily basis. Anytime company can pay bonuses. However, when it comes to bonuses, you can classify as incentive, and on annual basis is 15% of your basic. If it's monthly, it's 15% on your basic, and if it's yearly too, it's 15% on your basic. So if you go above 50%, or if you below 50% of your basic salary, then of course you charge 5% and pay to GRA. But if the total, let me say your annual salary or your even monthly salary is say 10 cedis, right? And therefore any bonuses up to 15%, you charge 5% and pay to GRA. If the bonus go above the 50% of the 100 cedis, they have to add back to your normal tax stream, payee rates, and apply and pay to GRA. So you can pay bonuses anytime, but at the end of the day, you should not go beyond. If you go beyond 50%, then you have to add back to your payee graduated rates. So that's how it works. So when you say, I know I can pay monthly, but you have to file your return with GRA at the end of the year. So that's why he mentioned annual, yearly. You can pay daily, you can pay monthly, anytime you can pay. But within a year, it should not exceed 15%, or if it exceeds 15% of your total annual basic salary, then the excess will be added to your normal payee rate. If it's below 15%, it tax at 5%, then you pay to GRA. Thank you.
Okay, thank you.
Memona, can I give
Yeah.
some clarification here?
Yes.
And I think it's an important clarification. Now, let us understand that income tax is an annual affair. If you look at the tax rate for the year, the only thing is that for administrative efficiency and for convenience, we allow to make the payment if it's very monthly, so that it doesn't accumulate at the end of the year before you pay, and then you have to top up a huge amount. And so the formula is what you referred to in the regulation actually is the annual. So you fit it into it. When you read what is there, you fit whatever is there for the year. Then you break it into the number of months. So all these things are things you need to know, aside of the answer to the bonus. So let's have that understanding. And now let's realize something that the employer, the obligation is on the employer to make sure that you hold the right sum of money from the employee's income. So it's not the employee at that point who is supposed to do that. It's the employer who must make sure that he's doing the right activity. And so as Charles indicated, that you need to understand that very clearly and make sure that we are doing the right computation. The formula is there to help us if we need to put it in the formula. I mean, if your income is a straight line, you don't have a problem. Beginning of the year, it tends to be every month to the end of the year. You know that once you put in the formula, it gives you the same tax rate to the end of the year. But if your income fluctuates, there's additional things that come to it which are not consistent, then that formula becomes important for you to be able to determine what you should withhold from your employee's income for the year and pay to GRA. So at the end of the year, you are supposed to do a reconciliation. And whatever has to be taken out, you take it out. The law actually says that employers are supposed to file an annual employee return, which most employers do not. So you're supposed to do that reconciliation with what the amount you pay to the employer, the employee during the year. Put it into the formula and check whether you have deducted the right tax to GRA. If you have not, then you're supposed to make that deduction and pay to GRA. Otherwise, you, the employer, you still have the GRA can charge you penalty for not withholding, because then the withholding will not have been complete. Thank you.
All right, thank you. And I'm sure that's also probably the perspective Umaru is coming from. It's probably from a payroll perspective. You know, how do we juggle the fact that we have to report monthly when a lot of the things and a lot of the provisions in the law are making reference to annual bands, annual income, annual thresholds. Obviously, in practice, we usually would divide these by 12 and proceed. But like you've said, it is very important at the end of the year to do that reconciliation to make sure that there hasn't been any underpayment of tax in order to avoid getting any potential penalties being assessed on the employer. So I hope, Umar, that answers your question. So, okay, let me see if we have any more hands up. I can see Sierra's hand is still up, but I'm not sure. Sierra, are you with us now? Right, so I think we'll move on to the chat again. Okay, I can see Priscilla had a follow-up. This was on the withholding VAT. So it's to clarify, can the withholdee who is not an agent claim it? Yes, the whole point is for the withholdee to claim the VAT that has been withheld on them on their own VAT return. So I think that one is clear. Another question. So maybe Ms. Anir, you can take this one. Does Ghana have a DTA with Nigeria? Our company purchased a service from Nigeria and delivers this service in Senegal. So how does withholding apply here? Okay, so maybe firstly, do we have a DTA with Nigeria?
We don't have a DTA. In fact, negotiated a DPA in Nigeria, but we are now going through the process ratification. So we haven't ratified it yet. So we do not have a DPA.
Okay.
First one. Second one. Now, if you say the client, your client, you purchase from Nigeria and deliver to your client in Senegal, the first question is that who are you dealing with? The person you're dealing with is let's say is a client who is in Senegal who is paying you. But the person who is earning their income is the person who is in Nigeria. So the withholding will be on the person in Nigeria, but who is the one that you are purchasing the item. Now, it becomes a bit interesting to discuss. What happens is that, so that's what happens. Now, when you take it to the client in Senegal, then now you are now earning income from the person in Senegal. So then that is not a withholding issue, but it's income you have to declare to taxes. So let me go there. The person you are purchasing the item from Nigeria is the one who is earning income from Ghana. And so it's on his income that the withholding will be. So the withholding is on that person. When you take it to your client in Senegal, your client in Senegal is going to pay you for the service you rendered to that client, which is income tax to you, the person. And therefore, which is income to you, the person. So you have to declare that income as part of your income and then pay tax on it. I hope I've completed the triangle part.
Yes, I believe that answers the question quite comprehensively. I think maybe a rejoinder to that, I see another question on treaties. Are there any plans for the Ministry of Finance to expand the treaty network?
I'll say yes. We are putting in a treaty policy, which is just finished working. We want to go through the process and make sure we have put together a treaty manual. Because we wanted to be sure that we are making treaties that will be beneficial, not just signing any treaty. So we are going through that process. So at some very soon we will work on a few more treaties. But as you mentioned, we want to have clear guidelines so that we'll be working on treaties that are beneficial to us as a nation. Now, there are some international work agreements where there will be some level of international cooperation at the UN. That one will offer us a multilateral treaty network. And also keep us everybody informed. So that will take about 2-3 years. But I'm sure we'll find some bilateral in that. I want clear criteria so that it is clear to everybody what benefits we are going to get and how all of the members of the Ghanaian community in terms of project and keep us.
I think the audio was kind of, I think it went down a bit towards the end of the submission, but I think the general point is well noted. So we are still essentially evaluating which treaties will be beneficial for Ghana. So obviously that means there's probably some cost benefit analysis being done. And I think we'll probably hear more in future as and when that has been completed. Right. So I think that's well noted. Dr. Etiahene, I think I might come to you. So,
Nina, you drop off for a few minutes. Drop off for a few minutes. I might
okay.
Yeah.
Okay, that's fine. All right. So, Doc, maybe just to hear from you, given your experience as a taxpayer, have you had to use the DTAs maybe in your business? Have you had to rely on those provisions, and have you encountered any of these? Any of these practicalities?
Yeah, I'm using it. I've not encountering any difficulty. It is clear. I'll do presentation on that. GRA has specified it and clarified how you should charge and the rate that you should charge. And the regulator has advised that if it's the first time that you are going to charge, consult GRA for them to assist you. as soon as you get approval from GRA, you continue to charge without going back to GRA again. It's simple. The rates are there. Each country has their own rates, and depending upon usually also when it comes to say dividend payment, sometimes they expect that the company has about not less than 10% shareholding in the company before it qualify, for the DTT. So if it does not have, then you need to charge. But when it comes to service and other areas, the rate are there. So, for instance, if dividends, Ghana is 8%, DTT could be say 7.5, percent. You are go through for a charge, and at the end of the month, when you are filing your returns, you add it to your returns. We have local. When I say usually, let me make it simple because you have diverse people joining. So you have your local tax charges or withholding tax charges at the end of the month you are filing. Then you may have also foreign one, that's a non-resident, and non-resident has it has definition. So during my presentation, I'll go into that. So I'm just using foreign for somebody who is not here in Ghana or is non-resident. So then you add it to local one, and the what you call the foreign and local one are added. As a resident and non-resident are added. When you go to the portal, it gives you option. You choose, is it resident person or non-resident person? If it's non-resident, the amount that you are paying, you just put it there and apply the DTT rate on it. You pay to GRA. Simple as ABC. It's not difficult. There's no complication whatsoever at all.
Okay. All right. So I think that's clear. Let me see if I can still go through if there are any other questions we haven't yet addressed. For a reoccurrence expense, okay. So I think Mr. Hochon, this comes back to you. And for reoccurring expenses that are less than 2,000 cedis, should we deduct withholding tax? And I'm assuming they mean maybe expenses that come every month, maybe, or they keep recurring several times in a month throughout the year that are not 2,000 individually. They want to know if they should be deducting withholding tax.
Yes, once the threshold is met, once the threshold requirement is satisfied, you'd have to withhold. The lacuna in the law or the weakness in the law is that the law fails to recognize that the transaction must relate to the same person. So, for example, if you deal with one vendor A, and it's less than 2,000, and you deal with vendor B, and it's also less than 2,000, in aggregate, like assuming that in aggregate is more than the threshold. The question is, if you want to withhold the taxes, who are you going to credit it to? Because, I mean, the first person is less than 2,000, the second person is less than 2,000, the third person is less than 2,000, but the gross amount is more than 2,000. But the law has a weakness there that we need to cure because it must relate to the same person. The threshold must relate to, so transaction in respect to the same person in excess of 2,000, but I think the law is silent there. So in the future amendments will cure that so that once you are dealing with the same person and it exceeds the threshold, we can you would have to quickly withhold. So the bottom line is the threshold requirement. And once the threshold is met, you don't have any excuse for not withholding. Thank you.
So, I mean, what happens? Okay, I can see Doc wants to come in, but let me just quickly ask my question, then we can maybe add yours. What happens if I start the year, I don't expect to hit the 2,000 threshold, so I don't withhold right away, right? And then it gets to a point, I look back, and in aggregate, we've exceeded the 2,000. Are we expected to go back and withhold from the very beginning or from the point at which the 2,000 was exceeded? I think this is a question that comes here.
Yeah, so at the beginning of the year, you've not met the threshold, so you are not withholding. So somewhere in the course of the year, you met the threshold or you exceeded the threshold. Immediately, the withholding is triggered on the gross amount. the withholding is triggered on the gross amount. So the first transaction was, let's say, 800. You were not required to withhold. The second amount was 800. You were not required to withhold because the gross amount is 1,600. And then the third transaction is 800, and it adds up to 2,400. When you are calculating the withholding, the calculation should be done on the 2,400 and not the last 800 that you have paid. So the gross amount at the time, that's how the calculation is done.
All right. Thank you. I think that's clear. Doc, did you want to come in here?
Yeah, so let's clarify that the 2,000 is for 1 year. It's for a year. It's not for a transaction. So let's note that it's for within a year. If I come to you 10 cedis 20 times, that become 2,000. Then you need not to charge me. But if I come to you 10 cedis 40 times, meaning I've exceeded the 2,000, and therefore you have to charge. So that's the risk aspect of tax management, which I think the amendment should not even be on the threshold. The amendment should not be a year. It should be one off. That any transaction below 2,000 do not charge withholding tax. That's how the administration should go. Because how do I calculate that within a year I've been to Mr. A 10 times or 20 times when that customer is not a regular supplier, okay? And it's just a cash supplier. I go to him 10 cedis today, another day 10 cedis. How am I going to know that now I have bought from such a person up to 2,000 cedis, and therefore I should have charged the withholding tax? For it is very difficult managing it. The law should be simple. That minimum should be, say, 500 cedis flats. It doesn't matter how many times the 500 cedis come. It should be a flat instead of giving for a year, because it's very difficult managing it, and does not comply with the Adam Smith Canon of Tax. It does not. Thank you.
Okay. All right. So thank you, Dr. Chahine. And I think maybe this might be a good time for us to segue into your own
So let me just throw a bit more light on it. I agree with Doc.
Okay, quickly.
But the position is that assuming the initial transaction, let's assume you start in the month of January, 800, February, 800, March, 800. And then by March, you have exceeded the 2,000 threshold. Because the first 3 months, 800, 800. So in the month of March, when you exceeded, that because your gross amount is now 2,400, you withhold. Any subsequent transaction will not be subject to the threshold rule again. So the very moment you exceed the threshold and the amount is subject to withholding, any subsequent transaction, whether it is 1 CD or 2 CDs, in excess of the threshold will not be subject to the threshold rule again. You would have to withhold. So the threshold rule is not repeated. Once you have exceeded the threshold, any amount is subject to withholding the course of the year.
All right. So I think that's clear now. Doc, so you have your presentation. This might be a good time to segue into that one. I will ask you, since we've already discussed quite a couple of the points under withholding tax, not to delay too much on some of the points we've already discussed. Sorry, Doc, I think you're muted. We can't hear you.
Right. So you want me to share?
Yes.
Okay. Then can you go off, please? The regulator, can you go from your sharing? The regulator is sharing, so unless he goes off.
All right. So I think I've enabled multiple sharing. See if you can share your screen. Okay. So Doc, in the interest of time, I'm giving you 15 minutes because I think we've discussed a couple of the concepts. So if you could focus maybe on, oh, okay, very good. All right.
I'm presenting the withholding tax in Ghana, what business need to know. So we'll go into practicality of the aspect. Regulator has presented a lot of them, so I'll be brief and concentrating on the practical areas. So that the objective, we talk about the historical antecedent of the withholding tax, and then appreciation of withholding tax application in Ghana. That's what the penalty and the risks, and what are the planning and strategy of withholding tax to minimize the risks. So the objective cover the introduction aspect. I have only 15 minutes, so I'll not talk much about that. And the objective is basically understanding the withholding tax application. Even with that, the regulator have talked much about that already. And also talk about the practical application, the penalties, and risk aspect, and also withholding tax planning and strategies. The historical antecedents are not bother you much about that. Basically, almost all the withholding taxes, with the exception of Ghana, UK, USA, Germany, others, they started withholding tax basically to get money to go to war. So that's how withholding tax started in other jurisdictions. In case of Ghana, withholding tax started, the essence was to widen the tax net, to bring more people on the tax net so the government get more taxes, and the target was on the SMSEs and individuals who were not paying taxes. So there was a strategy to introduce withholding tax so that anytime a good is sold or a service is rendered, a percentage is charged on the amount that you provided. So withholding tax basically started after the Second World War, basically World War to generate income to more or less support the expenses that are basically generated from the war. And as I said earlier, almost all the withholding tax antecedent is coming from getting money to finance war, with the exception of Ghana, where the essence was to expand the tax nets. And globally, yes, we talk about that. The Second World War, we talk about the essence was also to reduce the tax evasion and so on and so forth. Ghana, it was introduced, regulator has talked about it. We have stages in 1986, we come to 2000, and now we are still applying the 2015 Act. That's what the regulator presented. So we'll go into a few aspects of the 2015 Acts and see practical aspects of withholding tax and what kind of challenges that individuals are facing on withholding tax application. So we have withholding tax for, with this aspect, the regulator has thrown more light on that. So I'll just be brief on that aspect. We have goods and services, you talk about it already, you talk about the payee, you talk about it already. Then we have tax credit. So when you deduct anyone who deduct withholding tax from you must, you have entitlement for the amount that's so deducted from you and paid to GRA. So at the end of the period, when you are paying your taxes, you can deduct those credits from your tax liability, then you pay the balance to GRA. It does not necessarily mean that you have to wait at the end of the year before you offset your tax credits. Any withholding tax credit that you have, you can deduct from your tax payment or tax liability and net pay to GRA. Usually now company can have a self-assessment that you have to file on quarterly, file and pay on quarterly basis. So within the first quarter or within a quarter, any tax credit that you have, you are at liberty to deduct it from the total payment that you have to pay to GRA and make the net payment to GRA. And he talked about the individual also, which is payee. Individual withholding tax can go as high as 35%, depending upon your tax effective rate. So payee salary, and so on and so forth, they all come under the withholding tax regime. Regulator has already mentioned that. And then VAT also, now we have withholding tax on VAT. Some institutions are allowed to withheld 7% on VAT on goods that you supply to them. And the VAT that we charge on the 15%, VAT is 15%. It's not 21.9. Ghana people mentioned 21.9. Those are levies. Levies about 6.9. 6.9. The VAT is 15%, so they have right to deduct 7%. And at the end of the month, they must give you your tax credits. And when you are filing your VAT, you have right also to offset those credits that you have. Right. So we have various type of withholding tax in Ghana. Regulator has mentioned most of them, so I'll not bother you much. He has mentioned almost all of them already. You see crocodile machete, product machetes, as part of the presentation. I was allowed to do that. So yes, I'm a businessman. So whilst I'm talking to you about the tax, I must also promote my, product. So that's the product that we did as crocodile machete. If you are interested, just after the presentation, give me a call and we'll make some available to you. Now we are giving huge discounts because of the CD appreciation. Although CD appreciation also has its own implication on our business. So purpose and the benefit of withholding tax to ensure steady revenue for basically government and to reduce tax evasion and also spread the tax net, as I've already said. That's the essence why the Ghana withholding tax was introduced, to spread the tax net and also to simplify the tax collection processes and reduce tax administration costs. And the three, we talk about the E, which is efficiency, you talk about economy, and you talk about the effectiveness. And therefore, the withholding tax administration must comply with these three E's. So it simplifies the process for almost the taxpayer and then the tax collector with the GRA. We have rate forms in Ghana. Regulator have talked about it recently. You heard the removal of the betting tax 10% as the withholding tax. So from time to time, there are some rate forms that goes on. And we have for compliance and obligation filing and payments. Yes, withholding agent regulator has mentioned that. So withholding agent, almost every company who is registered with Ghana Revenue Authority to pay taxes and collect taxes are to withhold taxes on goods and services if the person is not exempted. And after that, he must supply you with the withholding tax certificate. Formally, you have to receive it manually, but with the portal that GRA has introduced, when withholding tax is deducted, these days, the agents do not need to send you certificate. You go to your website because your TIN number or Ghana card number has been used. You go to your website and you see that your credit has been given to you and your accounts has credited. You can go ahead, print it out, and pass the necessary JV or accounts transactions in your books. GRA has also given us option for payment. You can pay even through Momo, you can pay through your bank through their online platform. So yeah, filing of the withholding taxes is usually monthly basis. So as he said, it's 15 days following a month. We are in June now. So if you deduct any withholding tax from any supplier on the 1st of June, you are to pay it the following month, or the 15th that's on the 15th. You have to ensure that the payment is done and made to GRA. And usually when the payment is effected, the supplier these days need not to come to you again for their certificate. They have to go to the portal because it assumes that they are also registered and they can get their certificate over there. So we have various types of withholding taxes. The regulator has already mentioned all this, so I will not bother you much about it. We just view it, then move on. So the interest, the interest excluding individuals and resident financial institutions or other persons who are not exempted are charged 8%, dividend 8%, and it is final. I want to say final in tax means that we initially explained that on annual basis, you have to file your tax with GRA. So if a dividend is paid to you and you are filing your tax, because it's final, you not to bother yourself again. But where it is not final, you are to add back to your income and charge again. So assuming your effective tax rate is 20% on monthly basis or on the yearly basis, right? And we've already have some tax withholding taxes, which some certificates have been provided to you, or you have credit for that. You are to add back to your annual income. So if there's a difference, assuming the withholding tax is 8% and your effective tax rate is 20%, it means that you are to pay additional 20% when you are filing your annual returns. So if it's all final, means that when you are filing your annual return, you must add the gross amount back to your annual income, deduct the withholding tax certificate that you have, the differences. If your effective tax rate is higher than the withholding tax so charge, you have to add back and pay the difference to GRA. So that's the difference between final and non-final. So this rent here, I'll talk about it. I'll not bother you too much. I've provided Excel sheets, almost 37 or 39 withholding tax that UK chamber can share with you, later. So yes, regulator have talked about it, about the rent aspects, goods and service. He has talked about it already. 3% works, 5%, then services 7.5%. And we also talked about the threshold, and we said that is for 1 year annual basis, and it is very difficult managing this 2,000 because the regulator even said that if you purchase from the same person and it add up to 2,000, say 500, 4 times making it 2,000, that is exempted. Any purchases above 5,000 going within the year, you must charge. But the issue is, the practical element is, if I send someone to go to Massmart to buy me, say, a drink, that's company, to buy the company drink 500 Ghana cedis in the month of January, February, 200 cedis. How do I know that I've now reached 2,000? So I must charge, Massmart any purchase after 2,000 cedis. Company do not keep individual ledger for every supplier that they do for individual, and therefore its application become difficult. So the practical application of this threshold is to make it one-off, that every transaction not exceeding 2,000 should be exempted. It doesn't matter its multiplicity. That becomes simple, because the risk element here is that when GRA officers come for tax audits, because they themselves, they find it difficult to ascertain how many times you purchase from one particular person, then they will just lump up. So if your admin expense is 100,000, they will just charge withholding tax on the 100,000 without due cost to other withholding tax that you have already made. So this is a serious matter that GRA have to, Minister of Finance have to look at it. Businesses, we want you to be one-off. If it's even 500 Ghana cedis, we prefer that than increasing it. Possibly don't even increase it. Leave it at 2,000, but it should be one-off, not in a year.
Okay, Doc, I think let me come in here. I think in the interest of time, I think VAT withholding is not part of scope. So I think in the interest of time, maybe we can, I think probably close it here on the presentation. Unless is there any other submission? I would like us to close by 12, in a few minutes.
Okay, so I should end here.
Yeah, I think this is a good place to end.
Okay, right. Thank you.
Thank you.
Right, I have so many because I've not taken the risk. I'm not the regulator took almost all the time. I've not tackled the risk element. I've not tackled the practicality. I've not tackled the planning and strategies. Okay, right.
Okay,
Thank
well,
you very
maybe
much.
you can take us through maybe briefly through the planning and strategies. I think that would
So
be
then I'll leave here. Let's go to, because the other interest that what the Minister of Finance and GRA is here, they should have interest in it. And the risk and penalty, yes, when it comes to penalties and when you feel paying or filing your taxes, you have to pay 500 Ghana cedis at a spot and 10 cedis every day until you file it. And then the penalty of not also paying your taxes, that's 120%. That's compounded interest rate. And then the penalty element is additional to 25%. So here in the what you are saying that government has amended contract at 1960. Formerly, government was also paying compounded interest. Now, government has amended the act and they are paying simple interest. So we are view that companies are also allowed to pay simple interest instead of the compounded interest, so that will be on the equal playing field.
Okay.
Other risk element here is 30% initial deposits. When GRA come to audit you and they find out that maybe your total tax liability is 100,000 and you do not agree, you may go to them. Yeah, you may judge, or sometimes they may come down and agree with you a certain amount. But when they reach a situation that becomes difficult, both of you are not agreeing and you want to go to court, the court will ask you to pay 30% of the assessed amount from GRA, whether GRA figure is right or not. Company must find money and pay this. So this is another risk aspect that company also faces. There are so many risks here. I'll jump here. I will leave the risk matrices. So when it comes to planning,
I think it's
okay, right. I will leave
but
here.
you make the
because of
slides
time,
available, right?
Yeah.
You
Okay,
make the
thank you.
slides available, right? So I think we can take it from there. But I can see you have a couple of the planning strategies available. I think we can look at it once we get the slides. So yeah, not trying to cut you off, but obviously I think we've exhausted the time. Yeah, it is now 12 o'clock. So I think maybe we'll just quickly, I think I'll check. I think for questions, we've addressed most of the questions in the chat. Alexander was asking, when does zero rated apply? This is a VAT concept, if I understand the question correctly. This is for VAT, it doesn't apply to withholding tax. When can we not withhold taxes? As we've discussed, as has been said in great length, actually, unless it's the minimum threshold has not been triggered or it's not an exempt income or such, you generally will have to withhold. So I think for the most part, the questions have been resolved. I think our panelists have said that they'll make the slides available, and I'm hoping UKGCC will make this available as well to the public. So with that having been said, And I can see we have more of the crocodile machetes on screen. Thank you, Doc. With that being said, I think we've come to the end of the session. Doc, do you have any closing remarks you'd want to make to close off the session?
Well, actually, I took almost 3 weeks to do my presentation, but the time was not effectively managed, and I could not do my presentation. But all said and done, I think regulator did a lot of justice to some of the withholding tax issue. Although as businesses, we should have also known the tax strategy and planning, and the issue that we have as far as we have GRA and then Minister on board, Minister of Finance on board. They should have gotten some feedback from us to consider in their future amendment. However, it has been good, and thank you for the opportunity. Thank you.
Thank you. Mr. Hochonyame, do you have anything to add to that?
Yeah, so thank you very much for the opportunity to share GRA's perspective on withholding taxes. We have developed a practice note on withholding taxes. It's on our website. So anyone that is interested can just visit the website and download a practice note on withholding taxes. And if there are any inquiries or questions, we are always available. You can just contact any of the GRA offices, or you can send your questions via our online questions portal, and they will respond to you. So thank you very much for the opportunity. We are most grateful. Thank you.
All right, thank you. And I would also want to take the time to acknowledge the UKGCC as the organizer of the event, and for making this happen. I want to thank them as well for assembling this panel and for allowing us to basically have this conversation on withholding tax, which again, I think it's very timely, very necessary. We hope everybody will take what has been said on board moving forward. So thank you everyone. I think we'll bring the session to an end here. And as we said, if there's anything further, we'll make the slides available. But if you have any questions or such, you can reach out.